Good morning, everyone, and welcome to the Morning Market Report. I am Arby Piper. This is the Piper Academy Network, and these are green bubbles. So we do have a little bit of movement on the daily this morning. It actually happened yesterday. It started off. We got a little pump this morning, though, on the PPI data. We're going to be going over that. We're also going to be taking a look at the why we had a little bit of a pullback after that pump, which would be because of CPI tomorrow. We're going to break down all this economic data, take a look at all of that, and then also something smells amiss with all of this data. That would be the 10-year treasury yield hitting one of its 13-week high on this data this morning. A lot of uncertainty in the markets right now. We're going to try to help you find some certainty. And plus, we're going to talk about dollar cost averaging. I've got some new stuff to show you today. Shout out to everybody in the chat, guys. But we're going to be talking about a lot of stuff today. So just stay with me. Also, we're going to be looking at what happened here yesterday on Chart Prime. It told us, hey, look, right here. This means buy. This means the oscillator is screaming all the indicators, and then you got your little buy indicator right there, guys. It called all of this yesterday. So if you had Chart Prime, you would have seen all of that. We're going to be looking at the charts, looking at Bitcoin, looking at the macroeconomic news, talking about some headlines, and talking about some dollar cost average strategies. All that and a lot more right here today on the Morning Market Report. Let's get it, guys. Class is in session. Welcome to all the alumni in the chat. Let's get the drop down screen here. Drop down. Thank you very much. Like to see that there. Let's go give a shout out to everybody that's in the chat with us this morning. We got Harp in the house with us. Harp's in here. We got Ninja Glock. Crypto Coin Mindset. What's up to you, brother? How you doing, man? Let's see. BC Port Corp, the host of the Good Morning Crypto Show there too. Username is in here with us. He said, just finished taking a Gary Gensler. Morning's off to a solid start. Well, there you go. Tradefly. Dylan, Deep VA, we got Hachi, Tobias, what's up, man? How you doing over there in Germany? C90 for the win, and then Average Crypto Joe, Athos, and look at all that green, it's everywhere. Look, it's right there, man. It's a lot of green today. Then Crypto Trades, show them family. I'm going to, and then a morning from Melissa S. Berkoshi, no dinero. He's lurking and driving. Do not text and drive. Don't chat and drive. You can lurk and drive, but don't chat and drive. I would hate for you to be trying to counterpoint somebody or drop in a Piper Academy emoji and all of a sudden out of nowhere, bam. Don't do that. Let's go ahead and jump into the news today. Talk about everything we're seeing over there, and then we'll get into all of the data, guys. But let's go over to the news and let's check it out. Let me get it set up here because I don't have OC again today. He's not feeling well. He got some food poisoning at a resort in Mexico. This is my shocked face. But I love some of the resorts down there, but questionable what I'm going to eat. It's like in Afghanistan, guys. When I was in Afghanistan, I'd go and work at the Afghan compounds because I was a weapons instructor for the Afghan police, and so I would go and they offer you food. It's the culture, right? And so you can't really just turn it down. You don't want to offend the people that could be Taliban, right? So we would be training them, and then they would offer me food and stuff, and they would always offer me salads too. And I watched them wash their salads in the river, where downstream was a village where they were dumping their waste. So, you would take like a very little bit, very little bit. Does not play out well. So, third world countries, and a lot of those areas in Mexico, they definitely look like third world countries. So, look, got to be a little cautious. So, she got the chorrito. That's right, Crypto Trade. Let's jump over to the news, guys. Let's check it out, and let's see what we're seeing over here on the news today. Let's give a little refresh here. I got to pull this in, get that to the right size. There you go. Fits just right. Works every time. There you go. So jumping into the coin stats here, guys. Current market cap at 3.49, just under $3.5 trillion, up 7.07%. Volume up 31.1. So we like to see that. If we see a market cap increase, we do like to see the volume. If the volume starts dropping down, but we're still getting increase, it typically means a little bit of a top out. BC Port Corp. Yeah, go into the Discord, bro. Go into Discord, and you'll see a link down there under live join keys if you want to jump in, man. I'll have you in. Let's go. So looking here at the Mucal report, let me refresh this because I do have another piece of data that I dropped in here. Yeah, there it is. So looking here at this, we are at 46 neutral on the fear and greed index. I have a feeling it's probably going to be a little bit higher tomorrow. What's up, Buck? How you doing, man? Lunar Beaches in the house. And then the CMC altcoin season, guys. We're at almost at the 50% threshold. That's where we start to build into altcoin. We're at 45 of 100. There's still a little bit ways off there. We'll come back and talk about some X marks the spot. Let's talk about liquidations. In the past 24 hours, 98,210, get in there, 210 traders, 98,210 traders were liquidated. Total liquidations came in at $344.6 million in the past 24 hours. Ethereum had one order trade, guys, on Binance, almost $25 million on a single liquidation. How? Why? I don't get it. All right, looking here at the crypto bubbles on the daily, you can see we're green. Hourly, we are green also. Fartcoin down 2.2% on the hourly, but it's up 47.7% on the daily. I just don't get it. Good Lord, man. AI 16Z's up 36.6%. Virtuals up 22.2%. Told you guys, AI agents are going to be a hot one this cycle. I really do think so. Let me see if that happened to be BC Port Corp that just commented. It may have been, may not have been. I do not know. Nope. Maybe not. Nope, that's announcements. Cool. Just had to make sure. So looking here, let's go down and see what we're looking like here. Bitcoin currently at 97,000. Can I give that a refresh? I just want to make sure I get the most recent numbers there. Go down, please. It will not let me go down. There we go. 97,168 on Bitcoin right now, up 7.1% on the daily. Ethereum's up 6.4% at 3,200 after losing the $3,000 mark yesterday. XRP is up 9.1% right now at $2.59. Let's see here. BNB 4.4%. Solana up 8.4, $189. This thing went all the way down to like the 160s, man. Solana is just a beast when it comes to rebounds. Dogecoin up 11.6%. Cardano's up 10.5%, just under $1 again, making that rebound to the $1 mark. Avalanche up 7.9%. Tron's up 2.3%. Any other big movers? Chainlink up 11.3% to $20.36. Shout out to Buck if he's trading that thing. I don't know. Where is our cutest mod at? Is our mod not in here? Yeah, I'm all alone today, Crypto Trades. It's all right, man. It's all right. I'm used to I'm a lone wolf. I'm a lone wolf. Polkadot's up 6.9% on the daily. A lot of hourly movers here to the upside, guys. Any crazy moves? Let's go down here and look. I mean, we know Fartcoin, all the AI agents move. Caspa, shout out to Retro Mike, his favorite token. Caspa moving up 3 positions into number 41. It is up 21.6% on the daily. It's back at 13.3 cents. So there you go. Retro Mike Tech. Not sure if he's in the chat. I did not look, but that's that. There you go. His favorite token, Caspa. His nemesis, I should say. All right, let's talk about economic data. PPI month over month was previously at 0.4%. The consensus and forecast was that it would be 0.3%. That means that it would be higher, lower inflation, right? Lower than what it was in the previous month. Actually came in at 0.2% for the actual, came in under expectations. Okay, so not bad there. That one's a good one. I'm going to stretch this out in a minute, and you'll see the other PPI data of why we had that little rejection pullback and then a resurgence again. Core PPI month over month was at 0.2%. They expected it to be 0.3, 0.2. Consensus to forecast came in neutral. That doesn't mean that it's at zero. That means it's at 0.2% because it was 0% up. When you see this number here and you're like, oh, it went down 0.2%. No, not really. It only went up by 0.2% after you had this one. We actually need to see these reverse in order for inflation to come in line, right? So just so you know, this might be in line with what they want to see on growth, but it is still a growth on top of a growth. So PPI, some good PPI today, almost like you went to work before you went to the bathroom. No, actually, it wasn't as good as you think. I'm going to show you why. Because when we break this down and we get into the other indexes, and this is why we had a little bit of a pullback this morning. First off, the core PPI year over year for last month got a revision. It was at 3.4%. They actually upped it. No worries, BC Port Corp. I appreciate you, bro. They upped it to 3.5. So last month's inflation was 0.1% higher than what they said, and we still came in at that same level. So while we may not have come in at the consensus, we did come in higher than what it was reported last month, which is now neutral to what it was last month on the year over year. So 3.5% rate of growth is still hot. Now, to break this down and go over and talk about that, let's go look at what Kabisi Letter said, because he did a pretty good breakdown on it. Yeah, right here. So breaking, December PPI inflation rises to 3.3%. It's below the expectation of 3.5%. Core PPI inflation rises to 3.5%, below the expectation of 3.8%. A smaller increase than expected, but PPI inflation is now at its highest level since February 2023. Shout out to CJ Taylor, my brother's in the house. What's up, man? Further evidence of a rebound in inflation. This is concerning. The 12-week moving average of U.S. bankruptcy filings is now at 17, the highest in 2 years. This is also in line with the level seen during the 2020 pandemic and the 2008 financial crisis. So, yes, we did get better than expected data, but the data was still hot. And that is why we saw the pump up on the data at first, and then it started to pull back, and now people are going, what's CPI going to be tomorrow? Is this as bad? Is there still a chance to make some money here? And that's what we're starting to see right now. People trying to see if there's still a little bit of fuel left in that rocket before the yield comes in and stills all of the energy. Because when we take a look at that, let's bring this in. Show more, and let's look at this thread from Kabisi Letter, because he talks about this about that yield this morning. Something doesn't add up here. Today, PPI inflation data came in below the expectation, but the 10-year Treasury note yield hit a new 14-month high of 4.82%. Many are confused. Doesn't lowering the expected inflation mean lower rates? Bond markets are concerned. Let us explain. This morning, the December PPI inflation came in at 3.3%, which marked an increase from November. However, it was below the 3.5 that they thought it would be at. As seen below, the 10-year note yield surged on the news to 4.8%. Why did this happen? Over the last 3 years, lower than expected inflation data meant lower interest rates. That is, more rate cuts and less rate hikes are likely if inflation is cooler than expected. However, we have evidence that inflation expectations are only a small part of the run on the yields. The 30-year real yield, this yield after accounting for inflation, since the rate cuts began in Q3 2024, real yields are up over 50 basis points. If the real yields are rising, it's clear that there are other major drivers of rates than just inflation. And they talk about it in here. I'll drop the link to this, so you guys can go check it out. It's the Kabisi Letter. I don't want to dive too much into this, but bottom line is we got a pump this morning on the 10-year Treasury yield, which I told you guys is the thing you need to watch. It's all eyes on that 10-year yield. So we did get a move this morning on that, a pump off of that data. I want to jump over here and show you actually what we're looking at tomorrow. Let's put this back on 2, and then we'll jump in and talk about the what the FOMC is expected. So now, tomorrow, Wednesday, we get core inflation, and then the core for month over month, year over year, and then in the inflation rate here, inflation rate year over year. As of right now, we are expected to be at 2.9%. That would be an increase of inflation tomorrow. Okay. We are expected for the inflation rate to be up 0.1% on the forecast, neutral for month over month. But remember, This coming in at 0.3% would not be a neutral to this. It's another 0.3% on the monthly. Their target goal is 2%, right? So there you go. That we're kind of ways away from that still. And then core inflation tomorrow expected to be on forecast at its previous and consensus just below it. So we do have some more data coming in tomorrow. But if this data comes in hot tomorrow, which is possible with what we saw today, because the producer price index doesn't necessarily mean that the producer price inflation does not necessarily mean that the consumer price index is going to be in line with it. There's a little delay from the producer prices versus the consumer price. So we could still see that move tomorrow on the consumer. Let's look at the CME and see how they're looking, because this is their projections for the next rate cut, or the next rate meeting for January 29th. And as of right now, we're 97.3% chance that we do not get a rate cut this month. I think that also will scare a lot of people, even though they're already baking it in. There's going to be a knee-jerk reaction off of that too. So that's what I'm watching for there over the next. We got what, 15 days before that, and then CPI tomorrow. Lots of data to watch this week, guys. You can see here, looking at the markets currently right now. On the market open right now, Dow Jones is up about 0.4% there. S&P up 0.45, and the Nasdaq up 0.72. The VIX in the red. But let's go over and look at the bonds and look at this 10-year, guys. We are down. It's red, but it's at 4.799. That's right around the 4.8 that we had, which is the highest in weeks. So actually since 2023. There you go. So it's almost 2 years ago now. So yeah, the 10-year yield is still looking very healthy, or very destructive, whichever one you want it to be. You can have a really good, hey man, that wrecking ball is in the greatest condition ever. Yeah, it's still a wrecking ball. That's what that 10-year yield is looking like right there. This morning, Dow futures jumped 250 points after that light inflation report. That was what the first headline was that came out after that. Not really relevant now. Let's see here. Traders buy the dip. Did you guys hear about this, about Jamie Dimon? He did an interview yesterday, or Sunday, I should say, and he's commented on Bitcoin on Wall Street, biggest Wall Street opponent, JP Morgan. He was on, what show was he on? I think it was CNBC maybe, or ABC. I'm not sure, but he was on one of the shows, and he said, so I just don't feel great about Bitcoin. He said, Dimon's comments reinforced a broader bearish push as Bitcoin prices dipped to a 2-month low around $89,000. And immediately after the price touched that level, market participants swooped in and sent Bitcoin back above $95,000, resulting in a 5% gain for the orange coin. Early Tuesday, Bitcoin was trading at 94,800. It's now sitting at about 96,620. So there you go. Jamie Dimon, who's been at the helm of JP Morgan for 19 years, longer than any other bank CEO, isn't opposed to the general concept of digital assets. He just really does not like Bitcoin in general. So he thinks that it's used for a lot of nefarious activities. So, but yeah, Jamie Dimon makes some comments about it, and then people buy the dip. We're going to talk about buying the dip today, by the way. We got DCA setups, and we're going to break that down for you. Why some approaches to DCA. Got some new content for the members. I'm going to be sharing with them on the show tomorrow. Q&A with our members Q&A. I want to be sharing that over there with them. Liquidity heat map. We'll get to that. I don't need you. Goodbye. And then let's go back over here. Let's check out the chat. All right, there we go. Who all we got in the chat right now? That's funny, Athos. Listen to Piper makes me feel dumb. Lunar Beaches, no, dude. You talking about how to fix pulls makes me feel dumb. Everyone's got their angle, dude. You are the pull guru. I did a lot of research on economics, so everyone's got their thing. No one's dumb here, dude. Plus, you ask questions, which makes you not dumb, because that means you have a desire to learn, and dumb people can't learn. So, Paul Swipinger, there we go. Same camera problem as last time. Yep, I appreciate you, man. I appreciate you trying. Jamie Cramer, who? Jamie Dimon. Jamie Dimon. Jim Cramer actually was talking about that he's bullish on the markets again, and that the 10-year yield was not going to go much higher. So take that for what it's worth on Jamie Dimon's front. Retro Mike, what do you think about the Ondo unlock? Yeah, that's a good question, Retro Mike. What do you think about it? I don't follow Ondo, he says. All right, let's go jump in and take a look at the charts, guys. Let's break that down, and then I want to come over and talk about some strategies, because as you guys know, I've taken quite a bit of profit at $102,000 when we were up there, and I did start some processes of setting up for the cycle, because if we got a couple of scenarios here. Let's talk about this. Let's jump over here, side cam. There we go. So let's talk about this here. We have a couple of scenarios here. Markets continue to rally on the 10-year treasury yield and the risk environment. We're going to talk about all of the recession indicators today too. I got a great dashboard for that. But then also on the other side of that, you have, so we could rally through 2025, like the normal 4-year cycle. Historically, S&P, just so you know, after two massive bull years of 20% plus, does not typically continue to do that. It's pretty low on its gains, like 8-9%. So it could be a pretty meh year, honestly, for all assets. That's scenario one. Scenario two is Bitcoin does what Bitcoin does. 4-year crypto cycle, Q4 2025 blow off top, right? Could be a thing too. Scenario three, we have actually hit that golden pocket. I'll show that in a minute, but the golden pocket of trend-based fibs from cycle low to peak to the next cycle low, and that creates trend-based fib extensions, and we've hit that again, right? And that's usually the top. So with the exception of 2015. 75% of the time that has been the top. So we could look at that and say that's scenario number three. And now we're just going to be range bound in this 90% range with, sucker rallies until everyone gets wiped out. And then it dumps hard when everything finally plays out on the recession side. That's a scenario. Scenario four is that this is on the verge of Trump taking over, and they hand him a mess, and then that's when everything breaks. Remember, we've got an annual jobs revision report coming out on February 7th. That jobs report, the last time it came out, was 818,000 jobs that did not exist that they said did. We could see that also, where we get that confirmation of almost 1 million jobs don't really exist, and then it wipes out the markets there, and they just kick the can down the road, waiting for the Republicans to take over. That's a possibility too, guys. There's a lot of possibilities here. So, what is the best approach to lock in on your gains and continue to get exposure to the markets for the future? We're going to break all that down today, and let's go ahead and jump over to the chart, and I'll show you what I was talking about on that that top, where we could be like looking at the top. Let me get this on here. I did not even have it out for today. I think it's going to be this one. I'm pretty sure. Yeah, there we go. So let's go down here and take a look, guys, at cycle peaks, bottoms to tops, right? If you look at the first cycle, pulling from down there to there to there, that's your low to high to low for the cycle. That gave this golden pocket, and that was our top that we touched, right? I got a whole video on this out there that I did, was 108 the top. We do have the one outlier here. That was a 75%. I know it doesn't look like much. That was a 75% move above the golden pocket back in 2017, okay? This last cycle that we had here, we actually just came in under based on, from low to high to low, which would be low to high to low, gave the projection on the trend-based fibs for that level. We came in just beneath the 0.618 on that one. And then here at the 108, 108,000, if you take a look, guys, that was the 618. That was our top peak there. So that, if you talk about 4-year cycles, you can't just cherry pick what is the 4-year cycle. This is part of the 4-year cycle too. And so we have to consider that as a possibility. In this analytical soccer game, right? Kicking all this stuff back and forth, trying to figure out what is going on and go, this is a 4-year norm. Well, this is the 4-year norm. Which one of these is the most accurate right now? And no one knows that, right? No one knows which one's more accurate. We're just all playing the game together, right? Sorry, I had to take a drink coffee. Doing a lot of talking here. Let's go look at Bitcoin right now and talk about what's going on here. So these are my levels that I've given you guys a long time ago. This bottom one here was the hold this level. That was what this one was called before, but then we called it a resistance zone because we were down below it. Now we're back in it. But you can see our 1.236 fib, which is a fib extension. That is our rejection point after getting the buy indicator yesterday, guys. Look at chart prime. Gave the oversold, gave the uptrend, gave the power bar, the peach color on the power bar right there saying this downward trend is weakening, right? And then we get the buy indicator there after getting good bounces on the Jesus take the wheel level you guys have. All my members have these levels. I've shared this chart with you. Looking at where that bounce was, though, with all the indication there for confluence, give us a nice run up. We are above the dynamic reactor. You can see our wick actually has come down and retested that as support after we got through it. If we bring this in and look at this on the 1 hour, I think you'll actually see that there was a little bit of play there. Let me get rid of this. We'll bring that in. There was a little bit of a play there. It came back in and then retested it really clean. So that 4 hour dynamic reactor right there, pretty good setup for a bounce. I'm going to be watching it closely. But am I going to ape in? The answer to that is no, I'm not going to ape in. A couple of reasons why. One, let's go to here and look at this daily. I was watching this and I did not think that we were done when we were doing this pullback here because we had not fired any MVP candles. This is one of the oscillators from Chart Prime, Oscillator Pro. You just go up here to Oscillator Select, put it on the MVP. That's all it does. No settings for this, nothing. And it pretty much gives you the bottom indication. When this thing fires green, it says, hey, we're at a local bottom. You can count on a up move from here, right? Uptick. Price moving to the upside. We did not get one until this big wick here yesterday. That big wick was where I was like, okay, we might get a little, excuse me, guys. Sorry, I got the hiccups today. I'm not sure why. That little move there was why I was figuring that we were now bottoming out. Despite this pullback here, we did not get any of those green candles. So I was watching that closely. Now, if we start to move up here, the level I'm watching, guys, it's going to be 108 again. First level to watch, though, 102.5. That's going to be a liquidity grab at those wicks there, and then up to the top again. That's if we get a continuation to the upside, all data dependent. Looking here at the lower time frame, 4 hour, we do have a point of control coming in right here. That's coming off of this fixed range volume profile peak right there in the volume node. We do also have the quantum reactor coming into play at this level also. So looking at the lower time frame, we would have to get a bounce off of the dynamic reactor. Okay. We need to get that bounce off of that. We need to be able to break into this next resistance zone here. And then from there, get a rebounce on the 1,236 before heading up. Keep in mind, in that whole period of time there, this is going to be getting lower and lower. So this could be like dead in line with the point of control on the top of my resistance band, which is based on that peak again for volume. And so those would be the levels that I would say we have to break. 98,535. Let's go over and look at the heat map and let's see what we're seeing on there, because I think we might actually see some of those levels here. 24 hour. No, it looks like it's down to 94,000 again on the 24 hours is the hottest liquidity zone on the heat map. Anything giving us indication of 98? Not really, guys. Very possible we could just pull back. Here we go. We got one here. 98,900 is there's one little heat zone when you look at the weekly there. Very possible based on the lower time frames that we could see a pullback to that level of the $93,000 range there. Shout out to Alex O Crypto in the house, the man, the myth, the legend. What's up, bro? How are you doing? And thanks for bringing over the auto game. You are the man. I appreciate you. Welcome everybody that is in the chat right now. 124 viewers. Go ahead and smash that like button. I appreciate everyone joining me over here. I want to talk about the I want to talk about DCAing, guys, because I do have some stuff here. This is from Into the Cryptoverse, if you guys have never heard of it, but it's really good subscription. You guys should go check it out if you don't have it. My members and we talk about a lot of stuff on in our group sessions on our Discord. You can join that. But inside of that area is we do a lot of the stuff on this. So I'll be breaking this stuff down to the members this week. What this is here, this is Bitcoin price color-coded risk levels. And you need to understand this so you can understand what I'm going to be talking about on the dollar cost averaging approach. Because as you know, I did take a lot of profits at $102,000. Does that mean that I don't want any exposure? Absolutely not. I always want exposure, but I want to protect what I've made so far. And if we had a big pullback with the risk that's going on with 10-year treasury yield, I could lose all of those gains. It's not about how much you make. It's how much you keep in crypto, right? So I'm looking at now, how do I reapproach into dollar cost averaging? First, I need to know what is the risk of each of my DCAs, right? So if we turn this on here, you guys can see, I'm just going to show them all. There we go. This gives you a pretty cool like risk levels. You can see that like when we're down in the blue bubbles, those are good times to DCA. When you start to hit the reds and the oranges, maybe time to get out, right? And you can go in and turn these off so you can just see your bottoms and tops. Like, okay, so when I'm in these levels here, the blues, the dark blues, I'm going to be buying. And when I start to hit these orange levels and red levels, it's time to get out, right? And just run that back and forth. So Massey33, what's up? How you doing there? Bang, bang, bang. Magically adding 100 otters to the stream. 0 otters like streams. That's very funny, Alex. Though your otters do like streams, don't they? So this is one approach. I just wanted you guys to understand these risk levels, and they're like in bands from like 0 to 1, 1 to 2, 2 to 3, 3 to 4, right? So yeah, I wanted you guys to understand that. Because the reason that I'm a little bearish is because of the 10-year treasury yield. Let's talk about the treasury spread right now. And we're going to put this on the 10-year to the 2-year and just talk about that, because 0.5, that is where we start to get recessions in the past, is that spread there. Currently right now, that spread's at 0.37. We're at a 0.37. So we still got a little ways to go before that spread fully hits into that 50 basis point spread there that has always led to a recession historically. So we still got some time. But when we look at I want to look at the recession dashboard. There we go. This is the macro dashboard. There's a recession dashboard that I got to pull up here. Recession. And this is going to explain a lot to you guys. Recession dashboard, please. Where is that? I'll find it in 1 second. You just give me time. You give me a second. I got you. It is going to be under tools, maybe. Macro recession risk dashboard. There it is. Found it. Found it on it. So you guys look here. The only one that is red on here, you can see on unemployment, we're green right now. It's still sitting low on the risk level. It's like 0.2023. National income and product, 0.030. Production and business. Did I miss something here? Did I miss something? Oh, I did. Somebody gave something. Lunar Beaches Crypto gifted 5 Piper Academy memberships. Shout out to you, Lunar Beaches. I appreciate you, bro. Who got those? It looks like Lasers, Alex Prolific Crypto, Andrea, awesome. Dave Digital picked up one, and somebody else. Who was it? Clayt the Great. Awesome. So shout out to Lunar Beaches Crypto. You rock, bro. I appreciate you, man. And shout out to all the new alumni. Welcome to the gang. We have new members. Shout them out. I got it, Lunar Beaches. Man, I'm a one-man show today, bro. So let's talk about the production of business. It's still in the green. The only one that is red on here for recession on the risk board right now, right, is interest rates. And you can see it's at 0.925. It is almost peaked out, right? That is what, because we are danger close to recessionary risk, right? Now, I know there's a lot more green over here than this one, but I do want to point out what this one says. Because when this looks like, oh, dude, we're 99% green, 1% red, right? risk will increase when the value of the spread is statistically more likely to correspond to values leading up to the recession. Therefore, the risk on this metric, on the interest, on that one right there, this one peaks prior to a recession. The metric differs from the other metrics on the dashboard since it shows the risk of an upcoming recession instead of showing the risk that we are currently in a recession. So this one is the only predictive one on this dashboard. All these other ones, they'll start to turn red after we go into recessionary scares, right? But the interest rates, it is a predictor. Two Dub in the house. Two Dub, thank you very much. I now have a mod. Can somebody please, if you have access, Dave Digital, can you check, or Retro Mike? Can one of you guys check on Alexandra G? I have not seen her today, and I know she's in the SoCal area, and winds are picking back up. So I will message her after this. But if somebody can, at least DM her on X for me, that would be great. Because I worry about my people. I love all of you guys. So interest rates here, guys, this is the only one that's a precursor indicator. Now, some other things that we were going to talk about here with this, we talked about the risk bubbles, right, where we buy in and where we sell. But I do want to show this here. Let me go to my favorites over here. And then we're going to talk about the DCA strategy. So where is my DCA? Let's go to the charts. There we go. And then I want to pull up the DCA charts. It's under tools. DCA strategies. There we go. Perfect. Got it. So if we take a look at this, guys, I took my profits. First, let's jump out and talk about this. So I took a heavy profit levels at $102,000 Bitcoin, took a little bit more at 98,000, right? I'm still sitting on a little bit, but my biggest goal is I don't want to lose exposure for the potential of a continuation of the rally, right? We said that is one of the 4 scenarios that could be existing right now. On the other side, Amy's not a mod. Is Amy Lives Crypto in here? Awesome, she is. What is up, lady? How you doing? So I don't want to lose exposure, but I also don't want to round trip, right? So I took my profits. Now it's a matter of DCA. I want to show you guys, if you had bought back in, if you had started buying for the very first time, we'll do $1,000 a week. I know that seems heavy, but it's a nice round number, right? And you're doing it weekly. Why am I looking at Monday? Well, that's really simple. If I go in here and take a look at tools, it's going to show me this. Let's go into search, and I want to go DCA, best day to DCA. That's what I want to do. Let's go to that first. And if you look at this is going all the way back to 2010, the best day to DCA, meaning the times that you have bought low and then it has led to an upward movement. Okay. That is on Mondays. So Monday is the best time for you to DCA out of the 7 days, according to this. Let's go now and take a look at the DCA calendar, because we're going to DCA weekly on Mondays, $1,000. And we're starting this on the day of our peak in 2021. Up to current now, the end date now, as of today, guys, you would have $167,000 that you invested. You would own 4.9 Bitcoin, and your portfolio would be worth $470,000. Okay. But you guys remember those risk bubbles that I showed you where you had your low risk to high risk? What if you were to DCA based on those risks? So, for example, when it's at a light blue bubble, you do 1,000. When it's at a darker blue bubble, that means it's going further down. Then your risk is lower. Then you do 2,000 or 3,000, right? And so, yeah, I am too, C90. I appreciate. I'll check on her as soon as I get off of here. But that's called dynamic DCAing, okay? And I want to show you what that would look like. A dynamic DCA, starting at the top, you're going to do this. So your accumulation up to the risk of 5, okay? On that risk level, that would be like the midline. That's halfway up on the risk bubbles, right? If you only went in up to that level and you DCA'd stronger, meaning, let's go down here and take a look. DCA is a strategy where you buy a fixed amount at a regular interval, and then as the risk goes in, you go higher. So look, we're at 2x and then 3x. So 1,000, 2,000, 3,000, 4,000, 5,000 as the risk level lowers. So you would stop DCA in at 0.5. At 0.4, you would do, if it was that or lower, you would do 2,000 or 3,000, depending on the risk bubbles, right? And if you were to have done that at the top, you bought the top in 2021, you would have invested $202,000 and you would be up 293% right now with 8.4 Bitcoin. That is why it is important to continue to DCA despite taking your profits. You can take all of your massive profits off the table and still DCA. You're just resetting your DCA schedule with all of your newly made money. Overall, it doesn't matter where you are. I just showed you doing that from the top of 2021 to currently, you would still have made over 300%. So that is the that's what I wanted to share with you guys. And I'll be going over more of this stuff. There's a lot of things in here that you can look at across different tokens. So I will thank you. I appreciate you, Retro Mike. So I will be showing that stuff to our members and our community. Do a little bit on this Wednesday, and then it's going to be one of our new perks that we offer for our upper class in our VIP Discord. So, but yeah, some really cool stuff there. So yes, I have taken my profits, but I am resetting my dollar cost average entry. So let's go check out the chat, see who all we got in here. Amy Loves Crypto. Your last video was really cool. I don't remember the name of it. I watched it with my wife because I noticed that you had put one up and it had been a hot minute. And then I was like, yeah, this is pretty good. I don't remember what it was. Let me pull it up here. But if you guys have not seen it, it was, I watched it, I think it was like 2 weeks ago. Is that right, Amy? Maybe. Amy Lives Crypto. Let's go look. Amy Lives Crypto. It was, oh, you just put out another one 2 days ago for the 5-minute guide to altcoin season. So guys, if you haven't checked this one out, we're going to share this copy. There we go. And then we're going to drop it right there. So guys, go check out this video because altcoin season is an important thing to know about. And then it was maybe it wasn't that one. I don't remember. Oh yeah, no, there it is. What Trump 2024 can mean. It was 2 months ago. Oh wow. It was a long time ago. No, I have not continued watching the internalized Chinatown or whatever. I have not. It was a little weird for me. I started watching some other stuff though. But yeah, guys, go watch that one. And if you haven't seen what could be coming here in about 10 days, no, not even that. What is it? 6 days, go check out this video. This is the one that I remembered, and I guess it had been a hot minute there. Go check out that video. That is on what Trump inauguration day could mean for crypto, and it's a really interesting video. And I saw Amy Loves Crypto in here, and I remembered that video, but I just couldn't remember how far back it was. There you go. That's what it was. Go check that video out for her, though. Let's go jump in to do some more charting, guys, and just take a look here at what we're seeing. I just wanted to explain where I'm at because I told you guys I will always be transparent with you on what I'm doing in the markets. I told you guys I was taking some profits. I told you guys that I closed out a lot of stocks, but now I'm resetting that big DCA switch because you should always have exposure to Bitcoin. You're foolish not to. So let's go in and take a look here at Ethereum. I want to talk about that. We are back at a key level, and then we'll take a look at like the Dixie and stuff like that. I want you guys to know where that's at. We have retaken my diagonal band here, guys. This one goes all the way back to November 2022. I said it was our support level back here that we bounced on. We did get another bounce, and then we fell below it. We now have made a new outlier. If we bring this into the daily, you'll see this here. There's a couple of these little divergences where we break out of that as support, and they don't usually last overly long. I mean, on the daily, this one was the longest, but we just had another one here, and I want you guys to look on the daily at what happened. We came down, we lost our level, but we bounced perfectly on the daily quantum reactor from Chart Prime's indicators. Now we have pulled back up to the dynamic reactor, which has historically been our daily support. So Ethereum looking pretty decent right now, despite the market sell-off, because it has caught on some major support levels there. So keep that in mind when you watch these on the daily. Sometimes zoom out and you'll go, oh, that pullback was nothing more than testing here. Now, what I do want to see is that the quantum reactor turns green. If we jump over to the Piper Sniper kit here, you can see, let me go put this on the daily and you'll see what this looks like. Here, let me pull it up. There we go. You're looking at these two lines that are coming across, the two ribbons. One is the fast-moving quantum reactor. One's a slow-moving. If you look here on the daily, here are on our reactors, they're green, and we want to see that green because when we're gray, it's not showing a lot of strength. When we get to green, that shows the strength, right, on the slow mover and fast movers. So just like here, when we came below it, it turned gray. It didn't go red because this is saying we're not in a full threat yet. Just wait and see what's going to happen. This is kind of like hold my beer, watch this. So zoom out sometimes. You'll get a much different picture there on your assets. So I just wanted to point that out. I think that is about it that I wanted to go over today. We have the economic data coming out this week. Tomorrow, that's going to be the CPI. You got to keep an eye on what's going on with the 10-year yield, which I've discussed with you guys numerous times. And that one is going to be the big factor, the 10-year treasury yield. It's the only one that's a predictive indicator right now that we are heading to recession. And I won't be surprised if the current administration did not set up a house of cards with mines and bombs all around it. Just like, hey, enjoy. Here's your keys. Enjoy your money pit called United States. So just be aware of that. I wanted to make you guys aware that I have started the DCA process again, and I will be doing it based on risk. And that's my plan, is to keep the VIP community plugged into that, letting them know weekly what's going on. And Monday, based on that chart, is the best day to DCA. So I'll be doing it every week on Monday. But guys, I appreciate you all. Get ready to head out of here today, 4 p.m. Eastern Standard Time, Trade Academy with Trade Intuition. This evening, we got the Crypto Nightcap with FDY and TradeFly, and then Markets After Dark tomorrow morning, started all over again with BC Port Corp. Good morning, Crypto, and I'll be back at 9:30 a.m. Eastern Standard Time, bringing you guys CPI data and how the markets are looking at the market open. Until then, trade safe, and as always, guys, use some risk management. I will catch you all tomorrow morning. Peace.
Don't know what they keep telling me. Ain't no school like Piper Academy. We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling up the wheels flow low. I know you hungry for knowledge, that's profit appetite. Classes in session, this for the Army Piper acolytes. Trade flag at the soul, train ready. What a line from OCI, from a Mexican spaghetti, yo.
By the way, Alex of Crypto, I love you. You're the greatest friend anyone could have in the YouTube space.
Then you were part of that not a sore spine. But if you have step fall back to offline.
Boom shakalaka!
We'll keep that front line covered, even when we're dead and gone. We'll find a way to keep going, cause we gon' keep on rolling up the wheels flow low. Sound off to get rhythm, the ZTS rhythm. Rip it, Alexandra.